Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on Twitter, GoPro X and CHK daily weekly time frame. So the Twitter bears remain in control as long as these exponential resistances on the daily time frame continue rejecting the price. That will remain the case. We hit a lower low compared to yesterday, and we're just looking down at this 100-day moving average support of 1646, and then on down to the low of this pullback, 1627. And there's a lot of gap space down here, down to 1496. So the last thing that the bulls want to see is a loss of the 100-day moving average, a break of that low of Monday, and continuation to the downside. But it's pretty much a tightening range between that 100-day support and these dropping exponential resistances, and one is going to break by the end of this week, either a close below this level, which leads to weakness, or a close above exponential resistance, and the bulls will then start to try and form some higher lows and higher highs to reverse the trend. The weekly time frame is currently a bullish reversal doji off this middle Bollinger Band, so pretty much the bulls are looking to close here or better and give themselves a shot next week to confirm this bullish reversal candlestick and look for a rebound. But the daily time frame is not convincing in any way, shape, or form right now. And again, we have not seen 2 green days in a row in a couple weeks at this point. So bulls' backs are against the wall, with this 100-day moving average support being that wall that they are trying to defend, and need to see these bulls show up. Otherwise, we are heading to lower lows. GoPro on the daily time frame followed through to the downside after the close at the low of the day, signaling bearish momentum, and comfortable being bearish here as long as that 50-day moving average is support. That's a tight enough stop loss where if that becomes support, we can exit bearish and take a step back. But the risk to reward of that scenario favors reward, and we have this support of 830 that is a double low right now. Break 830, and we're looking at 828 and 820 before down to 802. So GoPro's still bearish as long as that 50-day is resistance, because we know if that 50-day is resistance, that this weekly middle Bollinger Band is resistance, as it has been for about 9 months at this point. So continuous upper wicks, continuous rejections from resistance, and no sign of the bulls really turning things around right now. And we've been in a sideways channel with a slight downtrend over the past couple months. And again, this 50-day is just very convincing as a level to be using to gauge strength off of. And right now that strength is favoring the bears. XXX, so it was a very clear upper wick of profit taking 2 days. And then we had an inside bar yesterday, and as soon as we broke the higher low pattern, which was right at the open, we had 2172 and 2175 as the levels we were watching. As soon as those levels broke, we know the bears were in control, and we know we're going to pull back and try and set a higher low. But the next support we were looking at was really down at 21 psychological, which was about a 3% drop, and we blew right through that level, right to the middle Bollinger Band. Very bearish day today on increased bear volume. At some points, we were down over 6% today. So that break was a very clear bear signal, and combine that with the fact that this weekly time frame is very clearly still a potential bear flag where we are rejecting from exponential resistance, and if we drop down and break 1855, we confirm the bear flag and see further downside. So this is a weak bounce attempt at this point. It's just an oversold bounce attempt on the daily time frame. So the fact that the weekly chart is all bears right now still, and the fact that the daily time frame was starting to show signs of weakness and the bulls tiring on this bounce, it was a clear exit to the bulls to get out if 2170s broke, and a clear signal to be going bearish. Middle Bollinger Band support is still holding, but if we lose that level, 2026 and 1999 are the 2 key support levels to be watching. Bears in control of X at this point. CHK, bears in control. So our top of the bounce was set. And now it's up to the bulls to form a higher low and then a higher high, breaking 529 to see continuation. One problem is that we have increasing bear volume here. This is not comforting to the bulls. We had oil dump on the inventory report. We've got the inventory report for natural gas tomorrow. The bears are all over natural gas. So the bulls really need that catalyst in their favor. Otherwise, we will see continuation to the downside here and be heading back down towards support of 470. Luckily for the bulls, we are significantly enough above that support that they could easily form a higher low and then make an attempt to try and turn things around. But that will remain to be seen, as right now the bears do have momentum. Weekly time frame rejecting from exponential resistance. This has been one very bearish weekly chart as soon as we lost $5 support, and we are just seeing that continue to play out. So I appreciate you watching. We will continue to check back in. Have a great night.